Everybody, Boris Lassa, BK Forex. I want to introduce you to my pride and joy, the latest in BK Forex's visual trading indicators for TradeView, my indicator called Run Trader, designed for those of you guys who want to trade on a short-term basis during the day for about 10 to 20 pips at a time. This is a tremendously useful, very, very profitable indicator that I've been using myself for quite a long time with a high degree of success. I'm going to show you exactly how it works, and hopefully you guys will enjoy it as much as I do. So the run trade indicator essentially works on the following basis. It, as always, uses our heat map structure. So for example, it will only buy dips in an uptrend or sell rallies in a downtrend. Here's an example of pound dollar, a very, very high volatility trade, incredibly difficult to trade. And let me show you exactly how well and how accurately this particular indicator trades this specific pair. So the basic structure, as I said, is it buys dips in a uptrend, sells rallies in a downtrend. In pound dollar right here, we're obviously in an uptrend. What this does, and it will tell you, it will basically give you a visual clue and say bottom. That's the clue for you to buy at the close of this particular candle. But, and this is a very big but, and this is what makes this indicator so incredibly powerful. This indicator only should be used if between the two bottom tabs you have a white candle. What does the white candle mean? The white candle means that they have been fresh trend highs. This is a green trend, this is a positive market regime, and this particular candle set a fresh high within up to that time frame within that regime. If that's the visual clue, then we have a high degree of confidence that a retrace in this particular trend is going to be highly profitable. So in this particular case, we have the white candle, we're going to buy the dip over here, and in a high volatility pair like pound, I would use a 20 pip target and a 40 pip stop. Generally with low volatility pairs like with the euro dollar, which I'm going to show you in a little bit, I would use a 10 pip target and a 20 pip stop for those short-term trades. So in this particular case, you buy over here, and obviously 20 pips, you're done. Now the next cycle brings you a bottoming signal right over here. Now this is, by the way, happening in Asia. As you can see, it's 1:45 a.m. in New York. It's 1:45 p.m. in Asia. This is a very, very quiet time, but a very profitable time using this particular indicator, because you could have bought this at around 26.25. You have a 40-point stop, so you have quite a lot of room here. It only goes against you maybe 10 points, and then boom, skyrockets like a rocket ship, making you 20 points quite easily. The next signal comes in right over here on the bottoming signal, and the signal basically, you're buying the dip here at 26.53. The stop is 40 points, so the stop would be 26.13. Now it really does go quite a lot against you. That's why I'm talking. You need these wide stops, but nevertheless, you're able to survive the stop. And as we keep going over here, we're in the trade a little bit early. In this particular case, this was around 26.50, right? Or 26.53. So our target would be 26.73. It doesn't quite get there till about right over here. Nevertheless, we're able to survive the stop, and boom, we're making another trade. So far we've had 3 consecutive winning trades. Now what's happening next? Again, between these two bottom tags, we have a high, fresh high. That means we have a lot of confidence that the bottoming signal is a great signal for us to buy. We buy over here, and there's literally no heat. There's just no slippage whatsoever. This particular buy over here takes us into the trade at 27.23 with a 40-point stop, 20-point target. We're done in about 15, 20 minutes. We've made our 4th consecutive winning trade of the day. Now, let me just play the price action for you on the short side just to show you exactly how it trades out from the short side. Okay, my friends, now we're taking a look at the euro dollar, which is a lower volatility trade that we can trade with a 20-point stop and a 10-point target. And as you can see, in the euro dollar here, if this is a short regime, it's going to give you tops. It's going to give you flashing top signals where you're going to be able to short. And what you can see over here, for example, is that these top signals are not to be taken because we don't have any white candles in between. There's no fresh lows, so therefore it's a false signal. And it's precisely why this indicator is so powerful. We don't take the signal, and therefore we avoid getting stopped out on a retrace higher. But let's run this price action and just see how it goes as we go forward. So we still have a negative regime here. It gets a little bit into a positive regime, then it still stays in a negative regime. And let me just kind of pause over here. So let's pause over here. We get a top right over here. Do we have a white candle that signifies a fresh low? Yes, indeed we do. Therefore, we have a legitimate short here, 28, 20-point stop, 10-point target, boom, money in the bank. We just took this particular trade. I actually took this trade this morning, and it was very, very easy money after about an hour's worth of trade. Let's keep going. Let's stop over here. Another top signal over here at around 10:20. Do we have a legitimate signal? Indeed we do, because we have a white candle in between these two tops signifying a fresh new low. So we short 20 with a target of 10.10, 20 stop. Again, 15 minutes, all it takes for us to make fresh money in the trade. Now let's go on to the next one. Stop over here. Even here, we have a top signal at around 110.07. We have a whole series of fresh lows that gives us lots of confidence that there's potential here for further downside action. We take this particular trade, 10.07, and of course, very easy money at 97, another half an hour's worth of work, yet another winning trade. So 3 consecutive winning trades in a row as we continue to short our trades. Now what's happening next? Let's pause this over here. Okay, now we have a massive, massive big short covering signal, right? And do we take this trade? Well, according to our pattern rules, yes, we do. Now, we've had 3 winning trades here, and maybe you want to say, okay, I'm done for the day. I really don't want to take it. It looks like this was a big short covering trade. Maybe I really don't want to stand in front of this big, big move. But nevertheless, we do have a signal that says it made fresh lows between these two top trades. So therefore, we have a legitimate short here. So at a legitimate short here, can we take this trade? Yes, we can. We can take it over here with a 20-point stop and a 10-point target, and let's see where it lands us. And even though it does give us a little bit of heat, nevertheless, it collapses. It's still the pattern proves to be true, and it continues to go to the downside, putting us 10 points in the money, pretty much from over here. So even in what seemingly is a very, very difficult pattern, we're able to come in and make the trade on the move. Even if we didn't want to take this trade, as you can see, 3 consecutive trades to the short side in the euro dollar, 4 consecutive trades to the long side in the pound dollar, and that's only 2 currency pairs, and this works on every single currency pair that you can run this on, depending on how much of a stop volatility target you want to put onto it. So tremendously useful tool. You could make as many 10 or 20 trades a day here, picking your spots, putting down 10 points at a time, and really collecting some very nice pips as the day goes by. As I said, this is my most favorite market junkie setup of all time. I hope you guys enjoyed as much as I do. This is BK Forex, free indicators for TradeView, available to all BK Forex members. Boris Schlossberg, over and out.